Hello and welcome back, everyone. Welcome to the Quickbooks class. Today we will continue paying bills. Yesterday we went through everything involved in sales. If anyone can hear me, please reply by chat. I will appreciate it. Thank you very much. Okay, and a reminder, if you have any questions, please send it by chat rather than using the question and answer session. Once you have money in the bank, we went through to do a deposit. Now you have funds to pay your bills. So obviously the next step is going to be to use the pay bill screen. You click on pay bills on the home page. You can also find the same feature on the vendor center and on the vendor's menu. The third option is pay bills. This is the screen to pay all your open outstanding bills. If a bill is paid or is not entered, obviously it won't show on this list. Here you have all vendors and all open bills. You could filter it several ways. Number one, you could filter it only until a certain due date. You don't want to see all the bills. Let's say you just entered a bill and it's not due before the next 30 or 60 days. You don't want to see it on the screen because you're not planning to pay it today. So you could select due on or before a certain date. And it's basically if the due date on the left side is later than the date selected on the first option, it won't show. Also, you can filter it by a specific vendor. You can only select one vendor at a time or all vendors. There's no multiple vendor option. Then you can also sort by 4 different types. The first option is sort by due date or sort by discount date if sorry, that was meant for someone. Just 1 second. Okay. Basically, you can sort it by discount date. If the discount is 1% net 30, 1%, 10, net 30, then you will have a discount date. I don't think there's any vendors who have a discount date. Oh, here you go. This is basically because the terms is 1%, 10, net 30. Then you will have a discount date up to when you're eligible to take advantage of the term, of the percentage date, of the percentage discount. Then you would have to make sure that the payment date on the bottom left side is on or before the discount date. If you want the system to suggest the discount that you're entitled to take, even though this person has the terms to take off 1% of the total bill, that's only if the payment date is on or before the discount date. So, for the next bill, here you will see suggested discount 1% of the total $115. And the reason being is, even though the due date of the bill is 30 days, but the discount is 10 days from the transaction date. And since the payment date is on or before the discount date, the system will suggest that you're entitled for a certain percentage. And you can sort to make sure that you want to take advantage of the discount date. But then you have to keep in mind, if you select to show bills only till a certain date, the system will look on the due date column, which is on the far left side. So even though you want to take advantage of the discount date, you won't show because the due date is not on or before the date on the show bills on the top. So if this is the case, you want to make sure you're set to show all bills and then sort by discount date. This way all the discount dates will show up on the top. Most of the time by default it's sorted by vendor. And you can also sort by this column, amount due. You want to take care of all these small bills first, or larger bills, whatever. Either way, whatever bill you want to pay, you simply check them off on the left side. As soon as you place check mark on the left side, it will flag to pay the entire bill. We have to make sure that there is no credit or discount for this bill. Let's take a look on one bill above. This vendor has available credit in the amount of $750. It's one credit, and the total is $750. So now if you try to pay this bill, there are two types of settings. One type of setting is to take the credit automatically, which is recommended. As soon as you place a check mark next to the bill, instead of issuing a check, amount to pay will be zero because this bill will be offset using a credit. And that's the proper way how it should be done. But in order for this to work, you will have to make sure that your setting on the edit menu, preference, the last option, if you click on bills on the left side, then click on company preference and make sure both are checked off. Paying bills automatically use credits and automatically use discounts. If you use automatically use discounts, then you will have to select a default discount account. Most of the time it will be a separate account. Doesn't matter what name it is, as long as it's either a cost of goods sold type on the right side or an expense. Then you click OK. If there is no check mark on one of these, then when you try to pay a bill, the system will not automatically take the discount first. It will flag to issue a check. You also have, either way, you have the option to revise it and to decide what you want to do. So, for example, if the system does take the discounts automatically, you have the option to click on Set Credits and remove the credit. The same thing applies if you want to take only partial credit. Sometimes the vendor tells you you have to split the credit into several payments. Then you would say, I only want to use $100 out of the credit, and the rest I want to pay. And you do it on this window. You override the amount you use. Once you're done, you click Done. This is the way how to pay the bills. Now, if you want to pay, let's say, you want to pay this gas and electric bill, but you don't want to pay the entire amount. Simply click on the right side where it says Amount to Pay, highlight it, and type in the amount you want to pay. You can't pay more than the bill. You can only pay either in full or less. What will end up happening, the difference, what is not paid, will stay on account, unless you write it off as a discount. You want to see the actual bill on the screen, you click on the bill and you click on the Go To Bill button on the bottom left side. This will bring up the bill entered in the system. The same thing applies to set discount, but this is only if you want to take advantage of a discount, either offered by a vendor or you're taking it on your own. If you have the terms set automatically to be eligible as a discount, and it's within the term date, within the due date, then once you click on Set Discount, it will show Suggest a Discount, and the system will automatically enter the amount you're entitled to. Since this is not a discount term, this is net 15, nothing is mentioned about a discount, the amount of discount is 0. If you want to enter a discount, you will have to simply type it in. If you enter any amount, you have to make sure that the discount account is entered in the next line. And this is usually the same account that you will enter on the setup window. Then click Done. If you want to post date the payment, change the date on the payment date on the far left side, on the bottom. Right arrow is moving forward a month. The left arrow is going back a month. How do you plan to pay it? By check or by credit card? By check, any time the funding is coming out, is coming out of your bank, regardless if it's a physical check or it's a debit card, online payment, automatic debit, ATM, the method is check. Same thing applies if it's using petty cash. If you're using a credit card or line of credit, then you would select method as credit card. But you have to make sure that your credit card account is set up on the chart of accounts. And it's very important, it has to be set up as a credit card type on the chart of accounts in order to use it on a pay bill screen. Are you planning to print a check from Quickbooks or a signed check number? In order to print checks from Quickbooks, you either need pre-printed special design checks for Quickbooks. You can order it through Quickbooks or through a local printer. Or you need a program for blank checks. Third option is online bank payments. And for this you need a service. And it needs to be compatible with your bank. Not all banks have this option. It's basically logging in to your bank account and sending out the check through your bank. Then you will select which bank you want to use. Basically, from which bank is the money going out. So let's say when you switch around checks, when you switch around accounts, the system lets you know that if you want, you can set that every time you open the pay bill screen, it should be set to this account by default. Sometimes you could use one account for one type of payment, one account for another type of payment. For example, most companies have an operating account and a payroll account. So I want my payroll to go through my payroll account and all others to go to a separate account. You can set this preference by Edit, Preference, Checking, and you fill this out basically. Every time you want the right checks, should take out from one account. The pay bill should be from the same account. Pay sales tax, make deposits, and this is basically your operating account. Then you click on Company Preference, and you set where do you want your paychecks and payroll liabilities to go out from. If you have a separate account for payroll, you will choose the payroll account. This way, you don't have to switch it every time. When you're done, click OK. The ending balance will show you how much money you will have after all checks are processed. So if you have a handwritten check, or it's an automatic debit, an online payment, or any other method, then you will choose a signed check number. Once you're done, you click on Pay Selected Bills. And this is the screen you will get to enter the check number. First option is let QuickBooks assign check numbers and they go in numerical order. Or you want to type in the number. If you use option number 1, you have to make sure you don't skip checks, physical checks. Best way is let me assign a check number and you type in the check number you use. Here's another option to choose the correct date. Once you're done, you click OK. Now it gives you a brief summary of what you just did. If it's more than one vendor, it will be each vendor on a separate check. If you want, you can click Pay More Bills if you want to pay more bills, or basically you're done. Now I had a question the other day. What about if I have a $10,000 bill and I want to pay it in partial checks? Meaning I want to have 10 checks of $1,000 each. Well, this procedure has to be done over 10 times. Pay bills, let's say you want to skip this bill. You want to divide this bill into 12. You will have to highlight it and say, I only want to pay $100. Pay selected bills. Click on Pay More Bills and do it over. Again, how many checks you want to print. QuickBooks does not have this feature to split one bill, multiple checks at the same time. Any questions so far on pay bills? This is basically how to pay the bills. Then you have the option to write checks. Write checks will be used mainly for checks not to pay bills. If you want to print a check, you leave it marked to be print. Otherwise, you have to remove the check mark more towards the bottom, the right side, to make sure you're able to enter a check number. If it's an online payment or a debit or anything else, simply remove the check number and you can type your own code the way it was paid. And then the date of the bill, by default, it's always today's date. The payee, person who receives the check, the amount. Once you enter a payee, all the information that you entered, the address basically, that you entered on the contact center, on the contact list, regardless if this is a vendor or a customer, which is more on top, or an employee, which is after vendor, or other name, which is all the way on the bottom. Then all the information entered on the contact center will show up on the address. Now it will only show up, let's say you choose a vendor, it will only show up the information entered from the bill from address, not on the ship from address. Then you enter the amount. Now, if you have anything to write on the check itself, let's say you're planning to print it, then you write it on here. If you have on the vendor center, you would have an account number by additional info. Should show up on the check. is a setting that has to be checked. Autofill account, pay account number in check memo. Usually it's by default checked. So I'm going to clear the check and you have to redo it. I select the vendor. Now the account number shows up. So let's say enter $100. And now you decide what expense account. What's the category? What's the reason of writing out this check? So let's say this is utilities, sub-account, water. This memo will only print on the stub, not on the actual check. So this is basically used for internal memo. If you spend the expense specifically for a customer, you will enter the customer on the customer job. And then you have the option to leave it as billable if you want to go ahead and bill your customer, or just for the record. Class, most of the time you won't use it. Then you can have multiple accounts, different categories for each check. And that's called split. The next time you will fill out a check for the same person, the system will remember all the splits that you entered. So sometimes, let's say, for now, you entered a few reasons, a few categories, and the next time it should only be one category. Instead of deleting each line, you can click on Clear Splits, and it gets rid of all the lines, leaving blank. You have the option to enter a brand new account. Recalculate on the bottom is if you made any changes after you saved it. Let's say, for example, I'm going to save this check. Now I decide, no, it should be more than $100. It should be 110. You have to make sure if you're trying to save this, you want to save the changes? Yes? You will get this message saying the transaction is not in balance. Make sure that the total on the expenses and the total on the top is the same. Instead of rewriting the total on here, click on Recalculate. It will basically update the top. Now you can save it and print it. If you want to print, let's say you have more than one check to print. Clicking on the print button will only print this check. If you want to print several checks, click on the arrow next to print and click on Print Batch. So let's see how this check prints out. First, you select the check number. This is usually the next check in line. So let's leave it for this check number. And this is basically the screen how it looks like. You have three types of checks. One is voucher, the check on top, two stubs on the bottom. Another one is called standard, 3 checks on one page, no stubs. And the third option is wallet, check and a stub on the left side. You basically have to either order it through Quickbooks and you have to specify what type of check you want, or when you order it from a local printer, make sure to specify that you want it for QuickBooks. You can't just say voucher check because there are several programs who use the same voucher, but they are different design. Then you click print, and you're basically good to go. When you click print, we have a printer hooked up on this. And by the way, this printer, VersaCheck printer, this is a printer that you buy blank checks, and you can use it for multiple companies, multiple accounts. That's basically a program. Once you click print, you will have the question, did it print correctly? You have the option to place a check mark next to the check that didn't print correctly and reprint it. If you just leave it unchecked and you click OK, the QuickBooks assumes that everything was printed correctly, and it will save the information on the register. If you click cancel, it's like it was never printed. Any questions so far? Now you're going into the register, the check register, either by clicking on the check register on the home page, or click on the chart of accounts and double click on your check register, or you could see the account balances on the right side, the middle of the screen on the home page, and you can double click on which account you want to see. And this is the check we just printed. The check we just tried to print. If you want to bring up this check, you will have to either double click, but you can't double click on one of the parts because this is a check and you're able to write to change anything on the register. So you have to make sure either you double click on the balance side all the way on the right, or once you select it, you highlight it, click on the edit transaction button on the top. This will bring up the actual check and you can make any changes. If you want to run a report, I want to see from this checking account how many times did I give a check for this particular person, for this company. Once you're on this check, it doesn't have to be highlighted, click on the quick report option. It will tell you how many times, how many checks or any other transaction type was issued for this contact person. This is another option. Instead of going to write check and selecting the arrow next to print in order to print batch, the other option is to choose the print check screen. This is all the checks from this account flagged to print with no check numbers, and you can pick and choose. Do you want all of them? Do you want none? You can click on it to uncheck it, to off-check it, check it off, and then you type in the check number, click OK, and then you get the print screen. Enter credit card charges. First, you have to make sure that the credit card account is set up on QuickBooks. Question, does it need to be hooked up with the credit card company? The answer is no. You could, you don't have to. Once you set up a credit card account on the chart of accounts, how do you set up credit cards on the chart of accounts? You click on List, Chart of Accounts, or Control A. This basically brings up a list of the chart of accounts. Click on the account button all the way on the bottom, left side. Select New, the first option. The account type has to be set to credit card. Click Continue. And then enter the account name. So let's say you want to enter American Express. Is it a sub-account? Probably not. Description, you can type in whatever description you want. Credit card account number. If you want for your records, you can enter it here. Enter opening balance. You will type in if you're not planning to enter historical information, and the credit card is already an existing card. Then once you're done, you click Save and Close. Now you will get this message asking if you want to set up online services. You can basically download transactions from the credit card company. You can do the same to download credit card bank information from your bank. Let's say you have an account in Chase. There are two ways how to download transactions from the bank. Either you log on to your bank, to your bank account, and you select the download from the bank account, or you have Quickbooks pull the information directly from your account. Different settings. Some company will charge if Quickbooks takes the information rather than the account should be downloaded into Quickbooks. Right now we will select no. I don't want to set up online banking. Now we have our credit card account on the chart of accounts. I can double click on the account and start entering information in the register directly, or I can use the forms from the home screen called Enter Credit Card Charges. First, make sure you select the correct credit card account. Right now, the ending balance is 0. There is no balance. If it's a purchase, make sure it's selected to purchase/charge. If it's a refund from the credit card company, enter click on refund/credit. Purchase from is basically the person you bought or used the credit card. If it's a gas company or anything else, you enter the information. So let's say it's for this company. The date of the transaction, reference number if you have, and then the amount. So let's say you bought for $20. Then once you use this company someplace, or rather set, if on the vendor center you have it set up as the account pre-fill. If I double click on this account, I click on account pre-fill. If you enter any account in here, it will automatically show up on the expense account once you use this name. Then you can enter any memo or customer, anything else. It looks very similar to a check. You can also use credit cards to buy items. Once you're done, you click Save and Close, or Save and New if you want to enter a new credit card charge. Now on the chart of accounts, you will see that this account, the American Express we just entered, has a $20 balance. That means it's a liability. The company owes for American Express credit cards $20. How do you pay the credit card? At the end of the month, you have, let's say you have all your charges, but assuming you only have this transaction. At the end of the month, you receive your bill. You click on the button called Reconcile. You can also find Reconcile under the banking menu, all the way on the top. Select Reconcile. Change the account you want now to reconcile the American Express account. Enter the ending balance, the ending statement date, the date that's on the statement. The first time you're going to reconcile this account, is always, the beginning balance will always be 0. Then you enter the ending balance that the bank shows you owe this amount. In our example, we owe $20. You type in 20. In QuickBooks, you don't have to type in .00, .00, only when you want to enter cents. If there's any final charges, you enter it on here. The date usually is the same date as the ending date. And the account should be finance charges. Or if you want, you can call it interest charges. You can keep track of the interest credit card charging. Please explain your question. Is this referring in regards to the credit card company charging your company? Or is this for accepting credit cards? There's two different charges for credit cards. One is to use a card to buy merchandise or anything else. Most companies will charge a finance charge if the bill is not paid at the first statement. That's called finance charge to pay for credit cards. This is what we're talking now. So let's say if they charge a finance charge, so now your balance is not $20, let's say it's $21. Why? $20 because we used the card, and $1 is because my credit card company charged me finance charge. If you enter any amount in the finance charge, you have to put an account where this dollar is going. Once you're done, click Continue. And now you will see all your payments and credits on the right side, the charges that you use the card on the left side. Select each transaction that you see on the credit card. So right now we only have one. If you click on it, now you're matched basically with the bank. The credit card statement shows $21 as the ending charge, as the ending balance. QuickBooks shows cleared balance is $21. Basically $20 from the charge and $1 for finance charge. The difference between QuickBooks and the bank statement is 0. This is how it's supposed to be. Then you're done, you click on Reconcile now. Your problem might be if QuickBooks and the bank don't match for whatever reason. You will have to go back and find out where the problem is, why it's not matching. Where is the difference? Now, on a credit card statement, and the same thing applies reconciling a bank, you will have totals. You will see your beginning balance, which is always the ending balance of last month. And that's why the first time it will be 0, because there is no ending balance from last month. You will have the beginning balance plus your payments and credits, which is the first number, minus all your charges in advance, equals your ending balance. If all the transactions from your bank statement or your credit card statement is entered in QuickBooks and it's checked off, then your difference should be zero. Sometimes you enter $20, but your credit card statement shows that you only charge $19. You will have a dollar difference. So you have to go through. If there is no difference, if there is a difference, the difference is not zero, then you will have to go through to make sure where is the problem. So let's say, for example, I don't check this off. Now I have a difference of $20. According to your QuickBooks, it's only $1 ending balance, which is the finance charge. According to the bank, it should be $21 ending balance. If you click on Reconcile Now, this is the window you will get. There is a $20 discrepancy between your statement and the transactions you have selected. You have three options: return to Reconcile, try to figure it out, or leave Reconcile and come back later, or enter adjustment. Enter adjustment is not recommended unless you know for a fact where the problem is, especially on a large amount, regardless if it's positive or negative. You need to figure out, you need to see where the problem is. If you click on Enter Adjustment, it will basically update with $20. So I click on Return to Reconcile. I know where my problem is. I click on it. Now I click on Reconcile Now. Now you have a balance of $21. Do you want to write a check and pay it off? Or you want to enter a bill to pay it off later? Let's say I want to write a check for payment now. I click OK. Now there is a check generated. In the same time, it's updating the reconciliation, and now you have two types of reports showing. You have the option to see only the summary, only the details, or both. Let's select both and click on Display. You could print it straight or display it on the screen. This is basically telling you that you could customize the date. You don't want to see the future transactions that haven't cleared the bank. Okay, this is a summary. The account started with zero balance. You only had charges, two charges, $21 total, and therefore your clear balance is $21. And your register is $21. Why? Because there is no uncleared transaction. Uncleared means you had charges, but it did not clear on the statement that you're looking at. You can print it, you can email it to different types, and we will go through the report, what else we can do. Most of the time, accountants will ask if you want to save this type of report, especially for banks. They would want to see it at least once a year. So you can print it. If you want, you can print it to PDF and save it. Let's close this out. I click on Escape. I press Escape on the keyboard. The same report, just details. Starting with zero, a list of all charges, which adds up to $21. And then this is the cleared transactions, meaning the cleared balance, whatever is on the statement, and also the register balance. If you have any other transaction that doesn't show on this statement, you will have a difference between cleared balance and register balance. And this is happening if you have checks still outstanding, not cleared yet. Same thing, you can print it, you can memorize it, you can email it, whatever you want. Let's close it out. Now you're back to the check. Select your checking account where the money is coming out, the date, which is usually today's date, and you're planning to print this check. Who is it paid to the order of? Usually you will have paid to the order of your credit card company, American Express, or whoever is collecting the money. So let's say Amex for American Express. On here you will have your account number, and this is the best way to enter it under the vendor center account number. So it will show up on the check automatically. And then you print it and you save it. Now when you go back to your American Express account, on the chart of accounts, the account balance is zero. You can double click on it, you will see your charges on the left side, your payments on the right side, the balance is zero. Any questions so far? The same concept is to reconcile a bank account. Let's say, for example, I have my checking account. Going to reconcile it as of whatever date it shows up here. And this is usually the end of last month. You need to enter the ending balance from the bank statement. Now, on a sample file, it's a little more complicated, it's a little more difficult to understand it. You will understand it better if you practice it on your own bank account, because it needs live numbers. So let's say, for example, I'm going to enter that I have right now $70,000 ending balance. If you have any service charges, the bank is charging you monthly fees, enter it under the service charge. There are a couple of service charges. One of them is use charges, like NSF, wire fee, overdraft fee. Usually you won't enter those types of charges at the end of the month on the screen. Here is basically for monthly type of charges. The date is usually the end of the month, and the account is bank service charge or bank charges, which is an expense, just a matter how you call it. If this account is a premium checking account or it's a CD, a savings account, and it earns interest, this is basically an income. You will enter it from the statement in this under interest earned. The date usually the same. The account is another income type. Some companies will have a separate other income type account called interest income. Some companies will put it together under the general other income account. Question, where would other charges from the bank be entered? The answer is, today's time, especially those who have a tight cash flow, will monitor the account online. You see something like this on your bank, in your bank account, you will enter a write check. You will enter it like any other charge. Just a different, it won't be with a check number. Paid to the order is basically your bank, and the account will be bank service charge. This way, you will always be up to date with your bank. Most companies today's time don't wait until the end of the month to find out about those charges. This service charge is only used for the monthlies. that you will get at the end of the month. Once you're done, you click continue. Now, please note if you enter any numbers on these two fields, on the service charge and the interest earned, you have to enter an account. You can't enter a number and leave the account blank. Click on continue. Now you will see a list of all your deposits and credits on the right side, a list of all your checks and debits. Those without numbers are debits, either online or automatic debits, recurring charges, whatever the case is. Every bank has a different layout on the bank statement. Most banks will have three sections. One for the deposits, one for the debits, and one for the check numbers in numerical order. So you would want a question if a debit card is being used against the checking account. You would also enter it as a write check. The answer is yes. For money withdrawn from your checking account, you will use the write check screen, or if it's meant to pay a bill, you would use the pay bills method should be check and select assign check number, and you can type in debit. This way you know that it was used. It was funded by a debit card instead of withdrawn from the account. A debit card is not considered a credit card because the funding is considered a check. Now you have the option to sort this list by date. Right now it's sorted by date. If you click on the word check number, now it will be sorted by check number. You can sort it by pay, and you can also sort it by amount, in case you're looking for something. It's easier to find. Most of the time you will see by date, but on checks and payments, since your bank will have separately all the debits and separate all the checks in numerical order, will be easier to reconcile. Simply look on the statement, the bank statement, and check off, click each check that you see on the bank statement, click on it to place a check mark. In this way, it will calculate your checks and payments from the bottom according to the bank. But you also have to make sure the numbers, the dollar amount, match with what is shown on the bank statement. Otherwise, you will have a problem at the end that the difference will have an amount. It won't be zero. Sometimes you might have an issue. You write out a check for $712.56. The person cashing the check only cashed at $712 or $712.50. You will have a difference. As long as you know where the difference is, then you could continue, you can proceed by entering an adjustment. Not recommended to go back to the actual check, to change the check, for several reasons. But if you know where the problem is, you can continue. If you don't know where the problem is, it's recommended to search, find out where the problem is. In the beginning, it might take you a little longer, but like anything else, you get used to it. Right now, on the previous screen, the question is, why not change the check? Let's say, for example, this is one example, accountants don't like any changes, especially if it's past accounting periods. Let's say you gave out a check December of 2010. They filed the taxes already. Comes in April, the check clears. You're going to go back and change the check, something that was written out in 2010. The accountants won't be too excited about it. That's why most of the time the accountants advise rather adjust it rather than changing a transaction, especially from prior periods. Now, when we started this reconciliation, this was the screen you start with. If you ever have to come back to this screen to make any changes, let's say the ending balance was not correct, you click on Modify. You don't have to exit this reconciliation screen and come back. You can click on Modify, and you get back to the screen. The statement date here is 11/30/2015, which is, since this is an example, this is a sample file, today's date is 12/15/2015, so the end of last month, which is most time the case when you're going to reconcile, is 11/30/2015. Most of the time when you're reconciling something from a month before, any transactions, deposits, and checks entered in this month will most likely not show on the statement. So why have all these transactions on the screen? Well, there is a solution for that. All the way on the top right side, there's an option to hide transactions after the statement's end date. Now, there is a disadvantage for this. Let's say you made a deposit. The end of the month is Friday. You enter the deposit on Monday, which is already the next month. You forgot on the make deposit. Let me show, if you double click on one of these transactions, it will show the actual transaction. So this is a deposit. This is actually physically was deposited last month, but you didn't change the date. You enter it as the new month date. Now, if you hide them, it will disappear. You won't see it. And you will try to search for it. Where is it? I know for a fact that I enter it in Quickbooks. Well, if this is the case, first uncheck it. See if it's on here. Double click on it. Make sure the date is correct. And then hide it again. This way, it will be easier for you to find transactions. And of course, you have to make sure, let's say this transaction went through and everything else. The bottom line, the goal is the difference should be 0. If that's the case, click on Reconcile Now. Otherwise, look it over again and see where the problem is. If you want to leave, sometimes some bookkeepers will reconcile on a daily basis just to make sure that they're on top of the bank balance, but they won't click on Reconcile Now to finalize it, only until the end of the month. It has advantages and disadvantages. Let's not get into the details of it. So they will click on it. This way, when you click on it but you don't finalize it, you click Leave or you escape out of it, on its check register, it will have a star. Those transactions that have a star, meaning pending reconciliation. If it has a check mark, that means the reconciliation is already done. It was already reconciled. Never ever remove or add a check mark on the screen. It might create a lot of problems. You will get, if you try to do this, you will get a big warning saying on clearing transactions, it's an issue. Don't do it. If you try to continue, say no. You don't want to save it. Why QuickBooks allows you to do that, I don't know. In the old days, if you had to redo all your reconciliations, you had to remove all the check marks. Today, there is an easier way how to undo the reconciliation. Let's say, for example, something got messed up. You don't know where the problem is. Especially if you click on Reconcile, this beginning balance next month does not match with your beginning balance on your bank statement, most probably one of these checks here were modified. Anyone touched this check either removed it or added checks where it doesn't belong. You can undo a last reconciliation only if you need. Basically, what the computer will do, it will roll back 1 month at a time, only if needed. Any questions so far? Now we're basically done with reconciliation. If you want to see the check register, instead of clicking on chart of accounts, you can click on the check register button. If you have more than one checking account, you will have to select which checking account do you want, which account do you want to see, which bank account. If you only have one, by clicking on check register, will bring you in directly into that check register. The same is if you select from one of the account balances on the right side. You have a refund. I don't know if we went through the refunds already. Customer expecting a refund. Could be because, did we go through refunds and credits already yesterday? Sometimes the customer returns merchandise to sell products, and they're expecting a refund, or at least a credit. Sometimes there is a price discrepancy. It's not really a discount, there is a price discrepancy. You sell it for $10, customer calls you up, we settle for $9. We agreed for $9. Now you have to give them a credit, you have to issue a credit for the difference. You click on refunds and credits. Start with, this is very similar to an invoice. It's just doing the opposite. In accounting, it's just doing the opposite of an invoice. It's reducing your sales and, in the same time, reducing your customer balance. You start with your customer. Let's say this customer returned merchandise. Class we don't use. The date of the transaction. The credit number is usually in sequence order. Customer's PO number, if it has. And then you enter the item. Now, depending on the situation, the reason why you're issuing a credit, if it's because the customer returned an item, or if it's a price discrepancy. If the customer returned an item, select the item. Let's say he returns one of the items that we shipped them. How many pieces? Let's say 2 pieces. The amount. the rate per piece and the amount should be multiplied. The rate times the quantity. You want to give them credit if it was charged tax on it, then it will come up automatically, otherwise it's non-taxable. This is if the customer returns merchandise for credit. If the customer has a price discrepancy, then don't select the item that was originally sold, even though the question is about an item. Because your inventory will have wrong numbers. For example, if you ship out on an invoice 2 pieces of an inventory item, now your inventory was decreased, is less with 2 pieces. Now, if you issue a credit memo for an inventory item, technically speaking, in Quickbooks, now your inventory is increased. It's brought back into inventory 2 pieces. So if that's not the case, don't select the item. Select rather a different type of item. The item should be a type called other charge. You can call it whatever you want. Some companies call it just general credit. Some companies will specify more detail that this credit is because of a price discrepancy. Every company have their own way of doing it. As long as it's not associated with the physical item. Then you will select the item and enter the quantity. Now let's say you're talking about $1 a piece. It's $2, so the rate is going to be $1 times 2 because it's 2 pieces. The amount will be the rate times the quantity. You can print it, you can email it, the same as an invoice. Now once you save it, you have 3 options. The same is in the new version. You can use one of the options on the top. Use credit to apply to an invoice or give a refund. When you save it, it will ask you the same question. Retain as an available credit, that means it's on account, not applied to anything. Apply to an invoice if this customer has open invoices, unpaid invoices, or give a refund. And basically the system will issue a check. If you click on Apply Invoice, it will show all their open invoices, and you have the option to pick and choose which invoice you want this to be applied. Give a refund will show up a screen as a check. All you need to do is enter the check number and the date. The system will do everything else. And it will issue a check for $38. Or you have the option to retain it as an available credit, which means the customer now has a credit of $38. This is how to issue a refund and credit. At the end of the month, you would want to send statements as a reminder for your customer, all your customers that owe you money. You click on the statements. Basically today's date, or as most companies do, they roll back to the end of the month, the end of last month. There's 2 options how to run a statement. What information do you want to show on a statement? Do you want to see a history, or you want to see only the open invoices? History meaning Beginning balance as of last time, as of the beginning of last month, plus all the charges, all the invoices, minus all the payments and credits, equals the new balance from this customer. This is a history. The second option is all open transactions as of the statement date on top. This is basically only showing everything that's still not paid, or even if it's paid, but it's not applied. So let's say you have an invoice for $100, and you have a payment of $100, but on the receive payment screen, you did not say that this $100 applies to this particular $100 invoice, then the balance is zero. But the open transactions will show two separate transactions. And the reason being is because it's not applied. You also have the option, include only transactions over a certain amount of days past due date. Sometimes you want to show only the open transactions, but you don't want to show an invoice from yesterday. So you have the option to choose that anything that's past due a certain amount should show on the statement. Do you want to send it to all your customers, to multiple customers, and then you click on choose, and you decide which customer you want to send? Each customer, you place a check mark. Only to one particular customer, and then you choose which customer. Do you want a certain type of customers? If they are set up under the customer center on the additional tab, then you could choose every customer that fall into this type of category. Or every customer that's set on the customer center originally, that the preferred send method is marked as email or mail or none, and you could run it separately. After you choose one of the customers, one of the options, click on the view selected customers, and you can see who falls under this category. You can preview, you can print it, and you can email it if it's set to be emailed. You can customize your own type of statements, the layout basically. If you have more than one template for statements, it will show up on this list. Now you can have customers, you can have jobs. Choose the option that you want to have one paper, one statement per customer, or you want to have separate per job. Show invoice item details in statement. This is if you want the statement to show exactly what's on the invoice. By default, it will only show summary, the date, the amount, and the due date. Print statement by billing address zip code is basically to have your statement pre-sorted. Print due date on transaction if you want to show on the statement when this invoice is due. And then you could select do not create statements for one of these options. Zero balance or balance less than a certain amount with no activity even though they have a balance. That means an inactive customer. Or you want to choose inactive customers should not get a statement even though they have a balance. Because in other words, they will never pay. You have the option to assess finance charges, but this is something more discussed in the intermediate class. Then you have the three options here. You're done, click close. This is how you send a statement per customer. Any questions so far? And there is one more option, one more feature called Create Sales Receipts. A sales receipt is a combination between an invoice and a received payment. Usually, when you create an invoice, once you save it, you have on your profit and loss, in general, you have increased your income, and at the same time, you increased your customer balance. Then, when you enter the received payment, you decrease your customer balance, and then it goes into an account called undeposited funds, and then you record deposits, and it goes into your bank account. Create sales receipt is a combination between these two. You can use it if you get paid on the spot, the full amount right away. But only if you get paid the full amount. It will not keep a balance of how much the customer owes. Click on Create Sales Receipt. Very similar to an invoice, with one option that you enter the payment method, because the computer knows that this is paid. It's just a question of how it was paid. So the design, the layout is very similar to an invoice. Now let's see how reports work. Click on the Reports menu. We went through the first two types of reports. One is called Profit and Loss Standard. The other report is called Balance Sheet Standard. There are different types of profit and loss. You can have standard is very similar to a summary. You can have profit and loss details. You want to see itemized each transaction. You can have a profit and loss year-to-date comparison this year. You can have previous year comparison. You can have another report called profit and loss by job. Any income or expense associated to a customer will show up on this profit and loss. This is designed for companies that buy and sell specifically for customers. This way it will show you any expenses or your shipping expenses if you pay specifically for customers, and your cost of goods sold, meaning everything that costs you to buy the product to sell it for a specific customer. If you use the class feature in Quickbooks, you can have a profit and loss by class. Mainly what is class used, as we explained in the beginning, you can have the same income or the same expense for different types of entities in the company. For example, you have two locations, then you can use class. On each invoice, you have the option to use, this is an income, this is a charge for this class, this is a charge for a separate class, and the same thing you will have on bills and checks and credit card charges. Then if you want to run a report to see, I want to see all my expenses, the same expenses but different classes, then you have a designed report, profit and loss by class. Profit and loss unclassified, if you're using class, you want to make sure, I want to see every transaction that's not classified. Income by customer summary, you want to see basically all your income by customer. Income by customer detail. Summary is only showing you a list of customers, and the total amount based on the dates that you set up. Details will show you a list of all transactions. The same thing, you will have expenses by vendor summary and expenses by vendor detail. Income and expense graph will show you a picture. Basically, a list of all your income and expenses. In this scenario, the green is income and the other one is expense. And here, the pie is giving you a list of all your expenses. On the bottom, you could see, I want to see the pie for expenses, or I want to see the pie in income. And it will tell you what type of income you have. On the top, you could say, I want to see it by account. I want to see it by customer. I want to see it by class. And then you can pick and choose what dates do you want to see. This is basically the income and expense report graph report. Then you have balance sheet type of reports. You have a balance sheet standard, a balance sheet detail showing all the information, every transaction, every check, every bill, all the transfers. And then you have a balance sheet summary, which is more summarized than the standard. Balance sheet previous year comparison. New feature in the later versions, balance sheet by class. The old one did not have this feature. Net worth graph is very similar to income and expense, but it only reflects balance sheet accounts. Statement of cash flow is to see. Sometimes an owner of a company looks at the profit and loss standard and sees, okay, at the end of the year, we had a net profit of, let's say, $100,000. Well, where's my money? You look in the bank, it's not there. So assuming, well, first of all, you have to see your profit and loss has $100,000, assuming everybody pays. You might have outstanding in accounts receivable. So the real way is to see the statement of cash flow to see where your money went to. Sometimes you spend it, but it's not included in the profit and loss. So this is the report for statement of cash flow. Cash flow forecast is telling you basically how much money you might have at a specific time. Customers and receivables, there are a few important reports. The first most important report is accounts receivable, AR, aging summary. This is a report that tells you all the customers and their balances and how old, the aging, how old these balances are. And then you have the total. On the right side, you have the totals. Now, by default, this report shows you the name and the jobs. Sometimes if you want to print this out, but you don't want to see the jobs, you just want to see the customers in total, you can click on the collapse button on the top of the report. Now it will only show the total name and their balances. The total balance is current, means it's not due yet. If it's past one day of the due date, the balance will show in the column 1 to 30. If it's past due more than 30 days, it will switch over to the next column and so on. This is assuming you run this report as of today. You can run this report as of last month, as of last year, whichever date you want. Do you want to see this report 1 to 30 and so on every month, or you want to see every 60 days or every 45 days? The last column will be anything above 90. Do you want to expand this type of report? You want to see 61 to 90, 91 to 120, and then 120 and up. Change this to 120. As soon as you change it to 120, either click someplace else or click on the refresh button on the top. Then you will see another column, 91 to 120, and 120 and up. This report is very helpful for accountants, and sometimes if you have a bank loan, your bank might request a summary of the AR aging. AR stands for accounts receivable. You can modify this report if you want certain modification. Let's say some companies will have more than one accounts receivable for whatever reason. Then you could filter it. I want to see all accounts receivable or certain accounts receivable. This is basically a report from the accounts receivable. I want to change the heading part. I don't want to show what time I ran this report. I don't want to see the date I ran this report. You could remove it, date prepared. You can remove the time prepared. Do you want to see the header on the first page or only on the subsequent, on the other pages? The same thing is on the footer. You want to see the page numbers. You can enter an extra footer line prepared by whatever it is, and then print footer on first page. If you want to change the company name, usually take the company name from the company information. If you want to change the report title, AR aging summary, you want to call it different. Subtitle is usually when the date is of this report. And then you can also change the font and the style of number. Some companies wouldn't want to see the cents, only the dollars. When you click on font and numbers, you can click on without cents. You click OK, it will remove all the cents on this report. Some you don't want to see on certain reports $0, or you want it to be divided by 1,000. You want the negatives should be in red. You click on it. So this is the example how it will look. You can memorize this report. If you design a report the way you like it, if you go through this report every time from the default place, it will show up the default way. If you want to save this type of report, you would want to memorize it. You click on the Memorize button, and then most of the time, it will capture the title, the report title name. You can change it the way you want it to be called on the Memorized report. This name will not show on the report. It will only show on the Memorized report section. Do you want to save it in a group, or you want it to show separately? You could create your own group in a Memorized report, and this way you know, especially if it's in a multi-user environment. You want to set your own group, and this is your type of report. Then you click on Save and Memorize Report Group, and then you decide which group you want. If it's not this list, you will have to create a group, and we'll see in a minute where we create this group. Then let's leave it without a group. Once you select the name, you click OK. Now it will show up under Reports, Memorized Reports, and here is the report we just added, AR Aging Summary. So, for example, if you close this, you go back to Reports, Customers and Receivable, you bring up the regular standard way, AR Aging Summary, you get back the original with all the jobs and up to 90 days. If you run the same report but from a different place, you run it from the Memorized Report, you point to Memorized Report and you click on AR Aging Summary, it's the same layout, you just saved it. If you make any changes, whatever changes you want, and you want to memorize this with the new changes, click on Memorize again, and you have the option to replace the original or add it as a new separate report. If you click on New, it will ask you for the name. To open a new group, you want to design your own group, click on Reports, Memorize Reports, Memorize Report List, the first option. Here is all your memorized reports. Some groups and memorized reports are already designed when you install the program by Quickbooks. Standard. You want to get rid of some reports. Let's say you don't want to save this report we just added. Right-click, delete memorized report. Are you sure? You click OK. Now it's gone. To open a group, you click on Memorize Report button all the way on the bottom left side. Click on the second option called New Group. Call it whatever you want. Let's say it's going to be my group. I click OK. Now I have a group. But I don't have any reports associated with this group. You could choose existing reports by editing the report. How do you edit the report? Either right-click, Edit Memorize Report, or by clicking on the Memorize Report button, click on Edit Memorize Report. Now you have the option to change the group, or if it's not in a group, assign a group. The idea of a group is that you could double-click on a group and run the same report at one shot. You could double-click or click on the Display button on the top, on the bottom, or you can simply print it. If you double-click on it, the whole group will be processed, and you have the option to change the date. Then click on Display or Print, and all 4 reports, actually the ones that are checked, will be displayed or printed. The next report is the same report on the company and receivables, but it's in detail. The next report is the same report as the AR Aging Summary without the dates, without the aging. Just has the companies, the customers, and the total amount. And this is the same concept. Right now you see the names, the company names, and broken down by job. If you want to see only the companies, not the customers, not the jobs, click on collapse. Now you see a needle report. This total is a total that all your customers owe together. And this total should be the same with the accounts receivable total on the chart of accounts. Also, the same total as the accounts receivable account on the balance sheet. This total is the same as the total on the customer balance summary and also on the AR aging summary. You can print all the reports. All the reports have the same options. You can memorize it. You can print it. You can email it in two different formats as an Excel. Of course, if you have Excel installed on your computer. Or you can email it as a PDF. The difference between Excel and a PDF is obviously that you can't change information or you have the option to change. Export is to send the report to Excel. You click on the export button and you will get a screen to choose a file where you want this file to be exported. Most of the time you will choose a new Excel workbook. And then you click on export. If you want to add this report to an existing Excel workbook, then click on existing Excel workbook, browse to look for the saved Excel file, and then select do you want to overwrite a tab, overwrite the sheet, or add a new sheet on the workbook. And then click on the export button and Excel will open. You will have the same format, the exact same layout in Excel. If you don't want to see this top, the 3 lines, also these two, basically the header, click on hide header. If you want to show it, click again. Expand. Since we clicked on collapse, right now you have the option to expand it and you get it back to the way it was. Refresh if you make any changes and you want this report to be updated, click on refresh and it will make sure it's up to date. You want the columns to be in total, or you want it by date? How do you want the sort? Default is in alphabetical order by the names, by the customers. If you want, you could see the larger companies, the larger amount first, or the smaller amount first. Right now, it's the smaller amount first. If you want, you click on total, and then change it instead of A to Z, from Z to A. This is mainly how to work around with reports. Let's see how other reports look like. If you have any questions, please send it in my chat. The next report is customer balance detail. And this will have all the transactions from all the customers since the beginning of QuickBooks till today. And this is useful if you have a discrepancy with the customer. You can't figure out where is the problem. You want to see all their charges, all their invoices, all their payments, all their credits, and everything else. But this will only show balance type of transaction. It will not show estimates. It will not show sales orders. This is the columns that's showing right now. type, date, name, account, class, amount, balance. If you want to add columns or remove columns, click on Modify Report button on the top and select the column that you want to see. Those who have a check mark, that means it's showing on the reports right now. Let's say you want to add a memo. You click on it. You click OK. Now you have the memo. If you want to move a column, let's say you want the number to be after memo on the right side. Click on the number with the left click, hold it, and drag it to the right side. Now it's switched. And the same thing you can do with any other. If you want to expand the column because you can't read it, you click on the right side to it on the diamond, you drag it to the right until it expands. To remove a column, let's say this column is always going to be accounts receivable. To remove a column, you click on the diamond, move it to the left all the way till the next diamond. This will remove the column. Also, you can remove it by clicking on Modify Report. See wherever it has a check mark. Let's say you want to remove class. Uncheck it and it will be removed. All these options, all these fields are options that you can add to the report. You want to see only from a certain date, you can select what date you want to see. If you want to filter it, I want to see only one name. I don't want to see all my customers, I want to see only one name. You want to see multiple names. You click on name, and then you choose from the drop-down menu what customers you want to see. And then you can choose whatever you want. You want to see only the invoices. Click on transaction type on the filter. And then from the drop-down menu, select which transactions you want to see, which transaction types. You want to see only the invoices, only the checks. You want to see invoices and payments. Click on multiple transaction types and then choose invoices, payments, or whatever you want. You click OK, now it will show only the invoices and payments. Discount is considered payments, so it will come along. The same concept, you can change the header part and you can change the font and number. You can also memorize it if you want, if you like a certain layout. Because the next time you run this report the regular way, it will come back to the default way. The next report is a list of all your open invoices. All your invoices that are not paid. Or all your invoices that are not applied. And this applies to credits and payments. That the customer has a credit or to send in a payment. If it's not applied to an invoice, it will show on the open invoice report. The collection report is a little different report. It will only show the past due invoices. Open invoices will show all the open invoices. Collection reports will show only the past due invoices. So if you have a term, if you have terms on an invoice and it's past the due date, then it will show up on the collection report. If it's before the due date, it will only show up on the open invoices, not on the collection report. But you can also change the settings. Right now, anything is past due 1 day. This invoice is the only invoice that's past due as of today. It's past the due date for 27 days. If you want to see all the invoices, you can simply change it to 0 days. And now it will show all the dates. not only the past bill. The idea of this report is that it's showing you the name of the customer, the telephone number, if it's entered, and the contact person. This is good to print. You have on one report, on one sheet, you have a list of open invoices plus the contact information. On the open invoice screen, you don't have that. You don't have the information, the contact information, like you have it on a collection report. A new feature added to 2011, average day to pay summary. As you will note, on each invoice, only in the later versions, the earlier versions, they don't have it. When you click on an invoice, if it's paid, it will tell you the date it was paid. And this is only, of course, if a payment is applied. And this way, the system has a way to figure out how soon do they pay, what does it take for this customer to pay. On average, they pay in 30 days, they pay in 60 days. It's a summary and basically a detail. You can have your accounts receivable as a graph. Unbilled clause by job is a report if you have a bill or a check, you have an expense, or you bought an item, specifically designed, specifically for a customer. Now, on the bill, let's see, on the bill you have a customer, and you have a check mark next to billable. Then it will show up on the report as unbilled clause by job. And this is basically a list. It will tell you this customer has these two bills and it's not billed yet. And it will tell you where it's coming from, which is the vendor, and what it is. As soon as you invoice it, or you can double-click on this bill and remove the billable, then it will disappear from this report. The next report is transaction list by customer. This is every transaction by customer, not only what's due, what's past due, everything. Customer phone list, you get basically a phone list on a report or customer contact list. Very similar to the customer center, but the customer center you can't print. If you want to print it or email it or export it to Excel, this is the way how to do it. And of course, you can also customize. I want to show more than the phone number. I want to see the phone, the fax, the contact people. So you click on Modify Reports and you select who you want to show. And then you have the item price list based by customer. The next group is sales. You have three types of reports under sales, and each type has two different reports. Sales by customer summary will show you a list of all your customers, how much sales, gross sales, how many invoices, charges you had for this customer. And then you can have the detail. So let's say you have a list of all your customers and how many and how much money on this particular date, on this time frame. You want to see it by the fiscal year. You want to see it fiscal month. You want to see it by week, today, and it's a summary. Again, if you want to see only the company, now it's broken down by jobs. You can click on Collapse. If you want to see the breakdown, how we got to this amount, double-click, and this will bring you to the detail. If you want to see the actual transaction, double-click on the line, and this will bring you the actual transaction, which is an invoice or whatever the transaction is. And then you also have the same type of report, but instead of customers, you have it by item. Sales by item summary, sales by item detail. Sales by wrap summary, sales by wrap detail. This is for commission-based. Sales by item summary will show you first all the inventory parts, how much it cost, on the left side how much it was sold for, and on the right side how much the average cost is. And then it tells you the difference, which is the gross margin. This is only for inventory parts. Then it will show you all the non-inventory parts. But this doesn't have the cost, because the system doesn't know how much it costs per sale. And then you also have all the service items that you sold. And then followed by the other charges. And of course, you could change the dates the way you want. The same you have for sales by wrap. And you can have, this is also a new feature that the previous versions don't have, sales by ship to address. Not only by customers, but you want to see the ship to address. Sales graph is the same. You can have a pie or a chart by sales. Pending sales. There is a feature to mark an invoice as pending or final. Sometimes you start filling out an invoice, but you want to save it, but you don't want it to affect your books. You don't want the customer to owe, to have a balance. Why? Because the shipment was not shipped out yet. So why invoice? Because you want to prepare it to be shipped out either tonight or tomorrow morning. So you fill out an invoice. Let's say this invoice is filled out. You right-click, mark invoice as pending. Pending, non-posting, meaning the items were not shipped, it's not reduced from inventory, there is no sales, and the customer doesn't owe you money. But it's an invoice, doesn't matter. It's still pending. Then you can have a report to see what your pending sales is. When you're about to finalize it, right-click again, mark invoice as final. Once you save it, now the customer owes you money, and the sale is finalized. You can also have a report for all your open sales order by customer or open sales order by item. Sales orders is whatever finalized sales orders either converted from estimates or you entered the sales order on its own. Then you can have all your open sales order by customer or all your open sales order by item. Basically, the report looks like this. This is all the open sales order by customer and the job. And the same report you have by item. Job time mileage. Most of the time it's not being used. This is basically done for companies that use estimates. They want to see an estimate versus actual. They want to see time, if they use the time sheet from Quickbooks, and if they update the mileage by vehicle, because they want to be able to keep track per job what the mileage cost is. So we'll skip it out for now. Very similar reports you have under vendors and payable. You will have AP, which is accounts payable, aging. How much money does the company owe for vendors based on bills? And then you will have AP aging detail. The same report, vendor balance summary, very similar to the ones on the customers, but it's just, instead of customers, it's for vendors. And then you have unpaid bills detail, very similar to open invoices. Open invoices for customers. Unpaid bills is all your bills on a detailed level. This is all your bills that is due for your vendors. We will continue with the reports tomorrow. If you have any questions, please send me an email, and I will discuss it tomorrow. My email address is mayer, M-A-Y-E-R, @fmdbusiness.com. Thank you very much. See you all tomorrow.